Edward Stevenson, TimelessWealth.net, and the following is basic technical analysis on Washington Mutual Incorporated, traded under the symbol WAMUQ. Last week, several members of TimelessWealth.net requested that I annotate the chart and price action concerning Washington Mutual Incorporated. I had annotated this one coming off of Thursday's trading session, which was the last trading session for 2009, and likewise Monday's trading session would be the first one in 2010. Coming off of Monday's trading session, shares of Washington Mutual Incorporated closed just under 17 cents and appreciated more than 21% on the session. You can see that I left this chart looking exactly the way I had annotated it coming off of Thursday's trading session, where I mentioned that this line indicated in green, of course the horizontal one, would represent support at 12 cents, followed by resistance at the 15-cent mark, and resistance in and around the 18 and 9/10 of a cent mark and 19 cents per share. What happened here was that the first thing I want to point out, the volume price correlation. This would be the volume that came in on Monday's trading session. You can see it's quite larger than the previous bars right here. So there was definitely bullish activity taking place. The price gapped up in the morning to open at 14 and 9/10 of a share, so just under resistance, and quickly broke past this. So this line should now look something like this. As resistance levels fall, they become supporting levels. Following the 15-cent per share resistance level falling, the price began testing the 100-day simple moving average at 15 and 7/10 of a share, or rather 15 and 7/10 of a cent, and that would be this white line right here. This is also now support given the fact that the price has broken above it, and the price rallied to 18 and 4/10 of a share, so that was the high on the session, which means that the bulls were looking to test that resistance at 18 and 9/10 of a cent and 19 area. So let me just circle that so you keep that in mind. This is a key area to watch for. Just based on what I see here, I would expect bullish activity to occur during Tuesday's trading session, just based on the volume price correlation right here. You can see that we are supported now by the 100-day simple moving average, by the 15-cent area, and basically all the other averages, including the 10, the 20, the 50, and the 200-day simple moving averages, as well as the top Bollinger Band, which although it's hard to see, is right here. The price also closed above that, and the top Bollinger Band would be at 60.5 cents per share. So that was quite thrilling to see the fact that the price broke past all those resistance levels. Obviously, you can see that the market went to work, and I'm sure longs are quite happy with the way Monday's trading session, the first trading session in 2010, turned out. I'd just like to quickly scroll down to the technical indicators, and we'll just confirm what we talked about. Okay, a few key things right here. The shorter term relative strength index has peaked above the 70 mark, so this signifies that we're seeing some short-term momentum. As these averages exceed the 70 level, we could see a very nice rally in price. And last time, all of these averages, including the 5, the 10, and 21 day periods, have peaked above the 70 mark, which is considered overbought, but is usually a concern for momentum. Was at this point in time right here, and you can see that was when the price peaked almost at 44 cents per share. The second thing I wanted to point out was the full stochastics bullish crossover right here. So not only do you have this white line crossing above the red one, but you also have a crossover above the 50 level. So you can see now it's at 51.4. So that's very nice to see. That means, you know, we're heading into a momentum zone, a trader zone, and usually that means the price will more than likely continue to appreciate. And you can see the money flow index is indicative of that, curling up, as well as the accumulation distribution, and any sort of money flow indicators you want to take a look at. They're all looking better than they did, at least compared to last week when, you know, we were stuck in this channel. Now we've broken out, and, you know, hopefully we're going to tackle that 18 and 9, 19 cent resistance. Actually, parabolic SAR is now at 18 and 7/10 of a cent, 7/10 of a cent. That's right, 18 and 7/10 of a cent per share. So reference in the top left-hand corner. So that would pose resistance, and I imagine Once the price breaks above parabolic SAR, we'll see a rally. Last time that happened was right here. You can see the price rally to that 19-cent mark or so, perhaps 18 and 9 cents of a cent, and that would be considered bullish activity. Once again, this was Edward Stevenson from TimelessWealth.net. I encourage you to visit my site, tune into some of the materials I've recently added, including articles, documentaries, all sorts of educational materials, and try my free newsletter for overlooked trading and undervalued investment ideas. Thank you for listening.